Hello, everybody. Welcome to Monday Morning Must Knows. My name is Merlin Rothfeld, and here are several things to pay attention to for the upcoming trading week. Now, I have to admit, I am extremely disappointed the way that this previous trading week turned out. I was expecting, because of Netflix earnings, because of Tesla's earnings, all these big bank stocks reporting earnings, as well as all the economic data, that we would have a wildly volatile week. Of course, as a shorter-term trader, I love the volatile weeks. Instead, we got a flat ocean that even a surfer would look at and go, I'm not going to go out there. It's a waste of my time. We had 5 days of pretty much nothing happening in the market, small little moves up and down. Where's my 1% days, my 2%, 3% days? I want those glory days back. Well, last week we didn't get it. Maybe this upcoming week we'll get it, and I think it's going to come from, I said this last week too, I think it's going to come from earnings. So let's start there with our earnings calendar to see what's cooking. We have over 1,000 companies reporting this week. That's 1,005 to be precise. We start things off on Monday with Coca-Cola, Cadence Design Systems, and Cleveland-Cliffs. So, a couple of big names there. But it starts to get much bigger on Tuesday. Start things off with Microsoft, Google, General Electric, Verizon, Visa, General Motors, and Mickey D's, which has one of the best looking charts you will ever see over the past couple of years. McDonald's absolutely crushing it, and we'll see what happens with their earnings on Tuesday. Moving on to Wednesday, we've got Meta or Facebook, you've got Boeing, Align Technologies, Waste Management, and the CME Group. Thursday brings you Amazon, Intel, AbbVie, Boeing, Bristol-Myers Squibb, Caterpillars, and Philip Morris. And just look at that Tuesday, Wednesday, Thursday schedule. Microsoft, Google, Meta, Amazon. These are the absolute juggernaut heavy hitters, some of the only trillion-dollar market cap companies out there, all reporting, ooh, yes, expect some wild volatility. And we're not done yet. There is something to speak of on Friday, especially for you oil and gas aficionados. You've got ExxonMobil, Chevron, and Colgate-Palmolive reporting earnings on Friday. Now, we're going to dive back into the economic data, and of course, the standard protocol is to talk about inflation, and economic growth, and unemployment. That's the trifecta. While we're getting two of those three pieces this week, we'll start things off with GDP, Gross Domestic Product. Now, Gross Domestic Product is interesting because as an economic data report, there are actually three reports that all represent the same thing staggered over a monthly period, well, a monthly cycle. So let me explain to you how this is all going to work, and then we'll look at the advanced GDP number, which comes out this week. The first reading we get for GDP is called the advanced GDP. Now, that will be coming out Thursday, April 27th at 8:30 a.m. Eastern Time. And this is important because this is really the first look we get at the expectations for GDP. It's not final, it's not the end, but it's just the expectations, but it's really your best and first reading of what GDP will be for the quarter. After that, 30 days after that, to be precise, you get the preliminary GDP, which takes some revisions over the advanced GDP, maybe a little bit of amendment there to the way the data is being reported or components. Thursday, May 25th is when that comes out. And then finally, once it's all said and done, after they've gone through the advanced, the preliminary, they say, okay, we've done all the adjustments. Everything looks good. Let's finalize this bad boy. We get the final GDP, and that's Thursday, June 29th. So obviously we got a few months to go there, but all those coming in 1 month staggered interval, starting with the advanced GDP. Now, the reason I'm bringing this up is because, lo and behold, this Thursday at 8:30 a.m. Eastern Time, we have the advanced GDP numbers coming out. And you can see over the past 4 quarters, we have had starting off a decline in GDP, all of a sudden starting to increase. And it looks like a 4-bar trend going from low to high, which is a great thing for anybody who's looking at economic growth in the U.S. However, the previous number was 2.6. Now, of course, there's a lot of expectation about what that new number might be. Some hoping it's going to be higher. We'd love to see more GDP growth in the economy. But the expectations kind of cooling off a little bit. The previous number, 2.6, drum roll please, the expectation for Thursday's read is going to be 2% growth, not the best number out there. At least it's not negative, so we can look at that from a positive perspective. However, whichever way it comes out, whether it's higher than 2.6 or it is the anticipated 2.0, just know that there will most likely be a good amount of volatility when that market opens up. So this is going to be pre-market on Thursday. Now, our next piece. It's going to go back to inflation data. I know, we're getting tired of this stuff, but inflation data is critical because it's going to steer the Fed's decision. We have a meeting coming up here May 3rd. Now, right now, you can see it's at 0.3% on that hard red edge there. Is that a good thing or a bad thing? Well, historically, that's why I drew that horizontal red line. Historically, it seems to be between 0.2 and 0.3%. So we'll say 0.25%. Right now, we are slightly above that at 0.3%, but at least it's not the wild price increases like we saw back in early 2021 and 2022 when we hit 0.5, 0.6, and even 0.7. So this, all in all, is not a bad sign. It's really about the expectation. And at this point, people are expecting it to come out exactly the same at 0.3. This would be good because it shows that inflation is not increasing. It's not decreasing either, but the concern is that inflation would continue to rally here and move higher. If it doesn't do that, that would create a little bit of optimism for our markets. Because remember, a couple weeks ago, we had CPI and PPI numbers, which both showed inflation declining. Now, that may actually carry over to the Core PCE price index, which comes out Friday at 8:30 a.m. Eastern Time. Again, 1 hour before the market's open, so it will be already priced in. But this one here particularly, even more so than the GDP number, can create some tremendous swings in the financial markets based off that inflationary idea. Where are we going with inflation? If it's under control, the Fed can backpedal a little bit on their interest raising and markets will rejoice, possibly. That, my friends, is your Monday Morning Must-Knows. We'll see you next week.